So, Melissa, yeah, first of all, in Boston, Cowen has got a big institutional event. I think the industry continues to grow in sophistication despite the capital markets death spiral, really. But you ask about the Canadian LPs, what's a driver for them? People were looking at, call it 2.0 in Canada, which meant derivative products, which meant gummies, topicals, edibles, this type of, growth in the product line. And to be clear, the addressable market in Canada is still significantly smaller than I think people even gave it credit for. So the problem with the big Canadian LPs is they raised a lot of money. I think our viewers and the audience and investors know a lot about the capital markets dynamics, which has put Canadian companies at a listing advantage. But the reality is, unless they have a global platform, growing alone in Canada is not really going to do it. You saw that this morning with one of the big Canadian LPs, Organigram. Their sequential revenue fell 36%, actually 42%, which was devastating. Tilray's going to announce tomorrow morning. You're going to get a sense of where their top line is growing. Their revenues are expected to come in somewhere around 50 million, which will be about a 10% sequential growth. People are looking at the gross margin. But when you're talking about Tilray, this was a stock that was $115 a year ago. And the real story is probably on their U.S. CBD business right now. Their Manitoba brand is growing very nicely. They're in 1,000 stores, 1,500 stores across the U.S. It's their JV and strategic partners in ABI and Authentic Brands and Sandoz that I think got people very excited in the name. But, back to Canada, look, if anything, we're seeing an inventory glut. We're seeing a slower rollout of 2.0. And I think the expectations that the companies are delivering, in fact, Organigram also went out and said, you know what, we're not going to tell you about 2020. It's almost impossible. Right. So it's a very difficult time for an investor. So
we got Organigram, which sort of scaring investors. But we also got Hexo earlier. The one good thing that Hexo did say was that pricing seemed to stabilize. I'm wondering if you think that's going to make any difference when it comes to how investors view this space. And which of these Canadian LPs do you think is actually the bellwether when it comes to their results and their commentary on the industry?
I think you have to listen to Canopy on Thursday. They are the biggest. They've had two difficult quarters in a row in terms of some sequential declines. I actually think their gross margin will be better. Look, a company that's got $3 billion in cash on their balance sheet at a time when a dollar allocated towards M&A or strategic or something, I think is enormously interesting right now. So investors, I believe, should think about it that way too. My guess is the big companies who have cash to spend are thinking about it that way, and they're not going to be spending a lot on OpEx the way they were. So I think it's a more disciplined approach to the balance sheet.